Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at _finance, and if you want to join our community, finding-value.com, where I dive deeper into all this stuff, looking for investment opportunities and sharing those opportunities with everybody in the community. I interact with people through a midweek update, which is a video released on Tuesday night or Wednesday morning. And I also record the weekend question and answer sessions that you guys have questions for me. And you can see my opinions on those questions. If that sounds like something that's interesting to you, sign up. Special coupon code, 50% off the first month only on a monthly membership, and a larger discount on the yearly membership. HFI Research, Transocean's looking more and more attractive. It says, my modeling indicates that with an active fleet utilization of 67% and no change in the status of stacked rigs, increasing the average drill ship and semi-submersible rate to $500,000 will cause the stock price to double, assuming no deleveraging. Now, there's been some people speculating on how high some of these rates will go towards the end of the bull market. And a lot of people are saying it's going to go over $1 million day rate. And these guys have some pretty solid ships that fetch some pretty good day rates. So that kind of tells us a little bit where we're at in the cycle. It's not halfway, $1 million, 500,000. But as we get through it, I do think day rates will squeeze at some point. I don't think it's going to be immediate. I think it will be out in the future. And they'll just continue to go up and up and up and up. And they're going to make a lot of money. And I'm not talking just Transocean. I'm just talking offshore in general. Offshore in general. And for the most part, most of them have put in bottoming patterns already, if you haven't already noticed. Kelvin just letting it rip. I thought it was funny. I said, well, you know what? Might as well read this. 99% of investors are morons who just chase momentum, sell what isn't going up. Zero tolerance for pain, zero ability to anticipate the future. Midwit boomers who only have money to invest in the first place because they lived in the easiest monetary period in history. Think about that. That's got a lot of punch behind it. I would agree that most investors, they don't learn how to become better investors. They just follow whatever's naturally programmed into their body. And most investors, since very few people need to make money, it's not a natural instinct. So whatever's a natural instinct for most investors, he calls them morons, basically. It is just chasing momentum. And it's selling whatever isn't going up. And the way that you make money is by taking advantage of that very thing. You don't chase momentum, you sell momentum, and you chase setups. And that's what he means by anticipating what could potentially come. So when I show people patterns who have no training and it's way down in a pattern, they'll be like, this stock's been going down for, depending on what the pattern is, it could be a decade. And it's like, yeah, that's exactly why I'm buying it. The very reason they're not buying it is the reason that I am buying it. it's kind of funny. I was showing, I've been a bull on platinum for, a decent time here. And there were people telling me that platinum hasn't gone up for 14 years. I'm like, you have no idea what I am saying every single update that I'm doing. It's not on the website. I'm talking about updates like here on Twitter. We're playing the out of favor sector. We're playing the undervaluation. We're playing patterns that are squeezing up. We are playing an inflation, an inflection of inflation and interest rates breaking the 40-year downtrend. Dan says, big overlooked positive oil price view from BP CEO. The headline, BP sees oil demand up 1% this year and next year. Overlooked, OPEC is back in the driver's seat as to where oil price goes as non-OPEC supply growth will stop exceeding oil demand growth. There is additional supply coming onto the market, but we think that demand and that supply from non-OPEC countries pretty much offsets each other. And therefore, oil price will be up to OPEC Plus to decide where it goes. What does this mean? It means that non-OPEC is losing supply. OPEC is gaining or putting supply back into the market, and we are losing spare capacity. As spare capacity gets thinner and thinner, the price will move on up at some point as that spare capacity thins out. Coming down, buy cyclical stocks during industry downturns. They will appear to be expensive. Most analysts will be bearish. Sell them when they look cheap on earnings metrics and analysts are bullish. Yeah, you basically just have to do opposite of everyone else. One way that we can identify if something's cheap or expensive is using ratios. So when I sat down, I created the 3 pillars. The 3 pillars is ratios, technical analysis, and market cycles. What this does is it can kind of tell you where you're located in the cycle. Ratios can. Technical analysis is a way to integrate the market's opinion through positioning of money and the herd psychology versus looking at news, because news is impacted by sentiment. News, you basically can't use news. So what I do is I look at how money is being positioned in the market through all these different sectors. I decipher what that means through technical analysis. I add it all up, I aggregate it all up for an opinion on what is occurring on cycle analysis. That's how I'm doing it. Some people can do that, some people can't. Now, did I read a book on this? No, I developed it myself. And the 3 pillars is what I thought was necessary to basically make decisions about investing. I don't think there's any other way you can do it. If you follow an expert, the problem with following an expert is they may or may not know enough about the markets to be successful, if that makes sense. So experts, even though they could be an expert in a single sector, they're not looking at other sectors around it, which has an impact on my opinion to invest in certain areas. So basically what I discovered, or what I thought my opinions are, is that most experts aren't good enough to be good investors. That's really what it boiled down to. That they are looking at things that are not important, and they're leaving out other things that are important. You could look at some investors and try to take cues off of other investors, but they seem to not want to share what they are doing necessarily. You can piece certain things together. For instance, Stanley Druckenmiller made a comment about the best way to tell how the economy is doing is by looking at the inside of the stock market, so to speak. And what he's basically describing is look at the technicals of all these different charts and sum them up. At least that's the way that I viewed it. And when I heard that, I was like, oh, that's what I do. I didn't know he was doing that until he said it in one of the interviews. I was like, oh, he does the same approach that I do, basically. Now, I didn't find this approach by reading it or studying it from someone else. I just came up with myself and said, what do I need in order to be successful? You need those 3 things. Cyclical stocks are cheap. They may appear to be expensive, but they're cheap when the ratios are cheap. They're cheap when you're out of cycle. And what's in my 3 pillars? Cycle analysis, ratios, technical analysis. That's how you identify. You go around looking for what's cheap. This is cheap in this sector sector ratio, and then you dive in. Then you should see the technicals turning and looking better for each individual company or the ETF or whatever it is. You can even price the ETF versus the sector commodity itself and see if it's turning and moving. And then what it does, it will tell you where you're at in a cycle. For instance, if gold and silver are outperforming dramatically versus, say, oil, what that means is that you're in a slowdown in the market. Same with if it's outperforming copper. If copper starts to outperform and oil looks like it's bottoming and starting to out to perform, that means that inflation is turning. The whole cycle's turning. It's going from gold and silver being leaders into a bottom where oil and copper and other things may be bottoming and turning against gold. That means the cycle is turning. And then you have to keep adding things up and cycling it back through your thought to see where we're at in the cycle. You can use other things, other pieces of information like Elliott wave theory. You can use price to book valuations or price to earnings valuations of certain sectors. That can tell you the big picture view of where you're at in the cycle. You can look at emerging markets. You can look at dollar being expensive or cheap. They're all part of the cycle. And then you add it all up and then you make an opinion. Robert Friedland says platinum crunch comes to a head as US and China snap up metal. Do you know why they're snapping up the metal? Why are we having a platinum crunch? Is it because supply and demand? People are like, oh, it's supply and demand. It's supply and demand. No, it's part of the cycle. It is part of the cycle. Why is it part of the cycle? Because no one wants to buy bonds. China can't buy bonds anymore. China didn't buy bonds in 99, 2000. Go look at how much they purchased. They went and purchased copper. They went and purchased platinum and gold and other things. Do you know why they're purchasing those things? Because interest rates have bottomed and it's starting to head higher. It's part of the cycle. And these things, all it is just humans reacting to the cycle. That's all it is. Humans reacting to higher interest rates and higher inflation. So what do you think people are going to do in the United States when they see higher inflation and things cost more money? Well, they're going to spend more on energy, housing, more on commodities and food, less on crap that they don't need because they may not have the surplus capacity to spend on crap they don't need. And if that hasn't happened yet, it could happen in the future. That's what we're looking for. Things are getting more expensive. Money's going to rotate from the things that people want to the things that people need. Criterion Research breaking: the U.S. LNG feed gas flows hit record summer highs at 17,244 million mmCF per day. Corpus Christi LNG implied rates surging to 2009-10 mmCF per day, near a record. Plaquemines LNG sets a new record, 3,213, and the fleet now running above expected August averages. America's LNG export machine is firing on all cylinders, and this is part. Man, that's way higher than last year. Look at last year compared to this year. That's a big difference in terms of LNG feed gas nominations. That's a big move. As we continue, we're going to continue to rip this higher in terms of LNG feed gas nominations. We're going to have more and more LNG terminals come online between now and 2030, and we're just going to continue to inch this thing up over and over and over. And at some point, we'll see how much gas we can feed. Can we feed this for 10 plus years? I don't know. We'll see. Some people are doubtful that we've got the natural gas flow rates to hit 2030 flows. We'll see. WTCI, West Texas Intermediate Crude Energy Update. Oil has been slipping. Not really. We're sitting on top of this. You can see we're squeezing up here. We just haven't broken out yet. I like this. Look at oil, a once in a generation opportunity. 93, 124, 216, 390, and $630 per barrel. Could something like that occur? I think so. Yes. What's gonna cause that to occur? A weaker dollar. Not supply and demand in the way that people think. A weaker dollar. And the weaker dollar is also going to push oil or gold and silver to the moon too. So crude oil could outpace it. Smart real estate bets. He says so much fail in one screenshot. Let's see what we got. It says U.S. housing market. Home sellers outnumber buyers by over 500,000, the largest gap ever recorded. Jerome Powell is hurting the housing market. He says neither one has any clue on how inaccurate it is. We have financial news source and a member of the cabinet who not only makes themselves look moronic by spreading news so inaccurate, it's mind-blowing. Yeah, this isn't the largest gap ever. Hate to say this. And yeah, I don't know about Jerome Powell's hurting the housing market. He may or may not be. We've seen correlations where rates and house prices go up together. So does that mean that when he raises rates that home prices go up? Well, it's usually the opposite. Usually the Fed chases the housing market higher generally. But yeah, this is not accurate. That's not the largest gap ever recorded. Sorry, just isn't. And there's Barrick now, major breakout likely in the making, in my view. Barrick Mining's basically breaking a logarithmic move there on the weekly candlesticks. The big boys break first, and then you start to see everything else behind it follow. I'm in the junior space just because it's got the least amount of progress. I also am a little bit Jekyll Hyde. So I have a bunch of physical metal, and then I kind of just go all the way to the juniors for the leverage. Barrick Mining, I don't even think will beat the metal. It may not. It might for short periods of time, but for the whole bull market, I don't know if it will beat the metal. So I just don't go after that, the bigger ones. They're gonna struggle to increase production. They're gonna struggle to replace their reserves. I'm not a big fan of the big boys. I like the smaller guys. EIA inventory moves. We've got crude with a draw of minus 3 million. Gasoline's down 1.3 million and distillates is down 600,000. So we had a pretty big draw across the board, about 5 million or so. Seth Klarman says value investing is at its core the marriage of a contrarian streak and a calculator. It makes sense. I do not own enough oil stocks. It says when you realize that Aramco thinks global oil demand will increase more than their remaining spare capacity. Yeah, prices would go up. It says Saudi Aramco CEO claims that they are seeing oil demand in the second half of 2025 more than 2 million barrels per day higher than in the first half of 2025, which means them increasing production is not going to offset this big 2 million barrel per day higher demand. So prices should go higher. They're trying to dampen the move. Platinum lease rates are going vertical, 14.78% for 1 month. That's not normal. Something is breaking behind the scenes. No one gives up metal at those rates unless they have to. What's going on with platinum? I don't know. I don't. A lot of people worry. They try to figure out the why for the move. Why? And they look at release rates, and it is interesting. Yes, it's interesting. Okay. But in all honesty, this is all part of the cycle. It's like we're coming into the strength of the cycle. Things like this are going to happen. If they're back there jacking with crap, then yeah, this market's going to break. Like it will break crap because they're not going to be able to stop the move. It doesn't matter what they're going to do with the paper market. The physical market is going to get drained. And then what are they going to do? Are they going to? They can't lease it. I mean, did I know this was coming? No. Did I expect that something could like something like this could happen? Yes. If they were back there jacking with stuff, then something like this is going to happen. And it's happening. Now, do I get all giddy? No, I just sit here and I wait. I already bought all this stuff when it was dirt cheap, and I just wait for this stuff to play out. And if it wants to play out and it wants to go vertical, then let it go vertical. There's nothing I can do. I mean, there's all sorts of stuff in the background that I'm kind of like, what's going on here? That's one thing there. SIL, Silver Miners, has been bullish since April of 2024, and it could look a whole lot better when the below wedge is taken out, toying with it now. Well, I mean, yeah, it's been bullish since 2024, but your entry point, if you're aggressive, was this bottom here in 2024 or before, depending on what the individual stock's pattern looks like. I like buying when it's really low and no one cares. The tech guys, they like all these, breakout levels. They need like all like 800 lines being broken first. I like the cheap, the real cheap areas. So that's where I load up. Now, a lot of people are gonna, they're gonna ask, well, should I sell it? I'm like, this is just getting started, guys. Like, we're just heating up here. Silver's got a long way to go. Charlie Munger says, really good investment opportunities aren't going to come along too often and won't last too long. So you've got to be ready to act and have a prepared mind. Yeah, that's what I do. I have a watch list. I watch things, and when things dip, and you get this window of opportunity to load the boat, that's when you got to do it. It may or may not last that long. We don't know what that window is. It could be a month, it could be 6 months or a year. Now, some people will buy it and they'll say it's not going anywhere, and they go and they sell it. That's where Charlie and Buffett will tell you you need extreme patience. You need patience enough for basically the stock to bottom and turn. But this is how they made all their money. But I guess everyone else who doesn't beat them, they've got better strategies. But they don't, because their strategies don't work. So why don't you adopt a strategy that works? It's taking advantage of impatience and using patience to take advantage of that. Again, I mean, all of their quotes interconnect with each other. The stock market is for transferring, profits from the impatient to the patient. Makes sense. The future looks bright if you're hoping for higher energy prices. And right here, this is producing wells, new infill wells in producing fields, under development and discovery. And right there is kind of where we're at. We're right at this like inflection point of what's going on here. And then the top there is the high demand scenario. Mean is in the middle there, and then the low is down here. Discovery, we'll see what happens, guys, and we'll see what the decline rates look like. A lot of this is all projected, and we don't know exactly what the outcome will be for a lot of these fields. But I do think that prices will have to go at least to 80 to $100 to make this work. Freight futures AM update: dry bulk Capesize is up 1%, Panamax is flat, tankers VLCC is flat, and Suezmax is down 1%. Oil supply growth from non-OPEC producers is set to peak in early 2026, while demand remains robust, according to BP's PLC Chief Executive Officer. Nick says, this must be the weak oil demand that the markets keep worrying about. It would be funny if it turned out markets should have been worried about supply instead of demand. We already went over EIAs. For the week of August 1st, that was our crude storage forecast, a draw of 1.19 million barrels per day. So yeah, that's all I've got for today there, guys. So that's where we're going to end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Specials, that coupon code. And that's all I've got. We've got a Q&A session on Sunday at 5 p.m. Mountain Time, just as a reminder. All right, guys. We'll catch you later. See ya.